Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We are going to talk about interest rate sensitive ETFs with our ETF strategist, Eric Dutram, who, by the way, did not consult with me before he put his suit and jacket and shirt on this
really
morning.
matching
right?
today, huh?
Yeah, I'm telling you. Doesn't happen often, but it does happen. So despite the market slide here that's been going on for, well, since the beginning of the year, there are some sectors that are benefiting, at least on the ETF side.
That's right. Obviously, U.S. stocks down, emerging markets are down even more. So investors have to be asking themselves, hey, is anything doing well?
Yeah.
And really, the rate-sensitive space, largely because Treasury yields have come down in the past, 3 or 4 weeks here, as investors are starting to get a little worried about both U.S. stocks and foreign stocks. Mm-hmm. They're piling back into bonds. And this is a little bit of a surprise to investors because everyone thought with the taper, we'd see a sharp increase in rates as the Fed kind of stepped back from the game, and investors had to kind of fill in the void. But with all the extra risks, we're seeing that hasn't really happened, and yields have gone down, and this has been great news for a lot of rate-sensitive ETFs out there. So, some of these sectors have been really beaten down in the past couple weeks, largely because investors thought these rates were going to be going higher into 2014, and to a large extent, they were going higher in 2013 as well. But this hasn't really taken place, and with the markets really sliding here over the past couple of weeks, investors might want to look at these as some better ways to play the market over the next couple of weeks and months.
All right, so what has been holding up?
Well, specifically, we've seen utilities, real estate, and home builders. Outside of the bond world, obviously, these funds have done pretty well. Mm-hmm. So these have really been the 3 sectors to focus in on, and they've been among the biggest beneficiaries so far this year. Okay,
so first up in this rate-sensitive space is utilities. You've got something labeled XLU, the ticker.
Right, and that's the most popular utilities ETF out there. It's a spider product. It's actually up about 3.7% in the last month, and it has a large cap focus, and it pays a solid yield. And this is going to be a pretty low risk product no matter what. And interestingly, utilities were the worst performing sector in 2013, but now in 2014 they are the best performing so far. Not a great performance, obviously, but hey, considering how bad everything else has been doing, it's not too shabby.
All right, then in the real estate sector, I'm going to give my Jeopardy answer with what is ICF?
Well, what is a large cap focused real estate ETF?
Okay.
This fund is up about 3.5–4% over the past month. It pays a pretty solid yield of about 3.5%, and with the solid returns in the home prices over the past couple weeks here, and with the Case-Shiller coming out relatively strong, and home rates also coming down, investors aren't really feeling that bad about the real estate space, and this is causing some investors to look again at funds in here. I picked ICF. There's a number of other choices out there that investors can look at, but this is a large fund with a lot of assets under management, so it should be pretty liquid to trade in and out of.
All right, and then in the home builder group, you've got ITB, which stands for?
Well, I don't know what it stands for, but it's a iShares home construction ETF.
That's what it stands for.
This fund has also been doing pretty well over the past couple weeks, and I did highlight it on the roundtable the other day. And
yes.
So I do think this is going to be a very solid pick. Unfortunately, on Monday trading, to start February, it was really beaten down along with the rest of the market, but thanks to some strong earnings from its top names, D.R. Horton and Pulte Group, this could really be a solid play, especially if home construction values really continue here for the next couple months.
So if you want to talk about performance of what you just outlined compared to the broad market, we'd be looking at what kind of a picture?
Well, as you can see in this chart right here.
You actually did bring a picture.
The S&P 500 is down almost 5% in the past month. Meanwhile, we see ICF and XLU really taken off over the past couple weeks. ITB has kind of slid recently, but I do think all 3 of these will continue to outperform the market over the next couple weeks.
All right. Do you own either or any of these?
I do not.
All right. Check out other ETF information, articles, commentary, you name it. It's in the ETF section of Zacks.com. So if you're watching this video out in syndication, get on over to our homepage, Zacks.com, link to the ETF section right from there. With Eric, I'm Terry Ruffalo.